Just to put things in perspective, since Niraj, you were talking about NVIDIA right now, and the gains have been stellar. I'm looking at the one-year stock performance. It's about 230 odd %. And a couple of the stocks in the basket that we're talking about today have gained about 140% each. Look, it's not the same, and they're completely different scales altogether, but there are opportunities in the Indian market as well, and that's essentially what we're trying to lay out. Yeah. The hotel space is what we're talking about. And we don't talk about it very often, but I think every time a hotel CEO comes and speaks to us, they talk about COVID-19 because it meant a lot to them. But every time they speak to us now, they're saying it was a bad dream that we've kind of forgotten, and there's a reason for that. But the question we're asking today, Niraj, is are hotel stocks right now, at least the 4 big ones, more or less, that we track, are they overvalued? Is it in the price, the outlook that they're laying out?
Yeah, I'd love to banter with you on this, by the way. But just laying the context first, it's been a great year thus far. So Q3 as well, if you just look at the kind of statistics, just laying them out for you, aided by increase in ARR and occupancy as well. So Indian hotels achieved the highest RevPAR, which is the used statistic, revenue per available
average
room, right? A growth of 25%. RevPAR for EIH's domestic network was about 23% as well, and that's not a large by market cap company, but the largest chain nevertheless, and growing. Chalet hotels occupancy rates saw 630 basis points uptick. Now, you could argue some of it could be because of the World Cup, but beyond that to 630 bips is a very large uptick as well. So Q3 net, I mean, I can go on with statistics, but this was largely what happened on the Q3. And I was looking at brokerage notes and what people have said. So Motilal Oswal note on the Q3 performance put it very aptly that ARR for the hotels basket, including ITC, grew 13% YOY. And the basket reported strong financial performance as revenue EBITDA grew by 21% and 32% YOY. Now, this is strong statistic, right? So what we're trying to say is that the numbers have looked very solid for the hotel companies thus far.
Right.
The question mark only comes in is because of what you just said, that the kind of gains that the stocks have made over the last 12 months or 18 months as the case may be, and is that kind of factoring in the best of earnings trajectory. So I've done 2 comparisons, Alex. Okay. One is the absolute PE multiple. Actually, that's not a comparison, this is a depiction.
Sure.
And I've used the trailing 12 months because they were strong as well. So you could argue, I mean, I've not used FY25 or FY26 right now, but just the trailing 12 months easily available as a metric. Look at Indian hotels, a market cap of 82,000 crores, which is great, but on a TTM PAT of 1230, and the trailing 12 months PAT means till December. So effectively calendar year 23 earnings, it's trading at 66 times.
67 practically.
Yeah. EIH 47 or 48, Chalet Hotels 76 times. These companies, especially Chalet, I remember was down in the dumps during COVID. It's now trading at 76 times. Typically what happens with cyclical businesses, down in the dumps to the top of the world, right? So on PE, that is the case. Price to sales, 12 times price to sales. Now you tell me, how does a cyclical business get a 12 times price to sales multiple?
So it is the bet, and it's not just betting. While you've taken the trailing, what a lot of investors are betting on is the outlook going forward as well.
Agree completely, but my limited point is, so TTM would be completely irrelevant if the growth is only in the future and not done in the past.
Sure.
The reason I'm more comfortable using TTM as well as a benchmark here is because the last 12 months have been fabulous for these stocks.
Right.
You discount it by a bit. 66 might become 50.
Yeah.
Or a price to sales of 12.5 might become 9.
Yeah.
So
what you're saying is, despite the outstanding performance, the multiples look great.
Just look slightly expensive. And just one last point out here, or 2 last points here. One, the comparison. Now, people are talking about global money coming into Indian stocks, etc. I chose Minor International, which a Thai-based chain has a clutch of hotels out there. And just look at the comparison of Minor versus the entire listed hotel space in India. The only exclusion out here is Kamath Hotels because it's had an erratic last 12 to 24 months. So I've left that out. But I've included the PAT of all the listed entities, Indian Hotels, Chalet, EIH, Oriental Hotels,
Lemon Tree,
Benares Hotels, Lemon Tree. I've included everything, okay? So everything included, the PAT for Indian listed space is 26 million. This one is 600. Revenue, $4.1 billion. This one is 1.73. And minor trades, as you look at it, versus at a revenue to sales, market cap to sales, of about 1.5 times.
Okay.
And our companies are trading at 12 times. So I'm just saying that some sanity, guys, about the valuations. But the outlook, just to give credit, the outlook is still buoyant, Alex. Very quickly, CAGR of 8 to 10%, supply. So our demand will grow at 8 to 10% is what most hotel chains have said. Supply is only 5 to 6%. So the imbalance
so therefore,
is
occupancy is expected to remain good.
Yes. And the new convention centers are actually adding. Just leave you with a statistic. One event in Geo Convention Center apparently led to full occupancy for all the neighboring hotels in the BKC region. Apparently happened in Delhi as well.
So
that's
therefore, the point that a lot of people make about these hotels losing business on conventions, which used to take place there, and with these large convention centers, they're not losing, of course, on residents and on occupancy.
Exactly.
Because people have to stay somewhere.
Yes.
But the other last point that I wanted to ask you about is there are a couple of hotels. I know that Lemon Tree is moving its model where traditionally we've spoken about hotel businesses being highly capital intensive and them having to build their own rooms, etc. Some of them are now looking at having only the ownership of the brand.
Yeah.
Is that something to look at very closely?
But done for a while now. Chalet has been doing that for a while. Rather, Chalet has not been doing, the others have been doing for a while. Indian Hotels, Lemon Tree, etc. So horses for courses. Some people believe they want to own the assets. Some people are saying higher ROCs are better. To each their own, I guess.
Okay, so exciting space nonetheless, maybe just a tad bit expensive.
We are asking that question.
Absolutely.